Hello and welcome to a very special edition of the Defiant Weekly as we get to joust with one of the most mercurial talents in the crypto space. As the CEO and co-founder of eToro, he's probably done more than anyone to bring retail investors into trading with innovations like fractional shares and commission-free trading. Back in 2013, he co-authored the now legendary Colored Coins white paper with a young man by the name of Vitalik Buterin, who went on to develop something notable, the name of which escapes me. Now, as the world was struggling to get to grips with the COVID pandemic, the concept of universal basic income began to be taken far more seriously than it has, well, in decades. GoodDollar is Yoni's crypto solution for UBI, a global movement to bring economic opportunity to all, a single dollar for all. And that is how we've come together today. It's a fascinating conversation covering Yoni's journey into crypto, NFTs, and how to solve inequality at scale through trickle up economics. He's a true legend. Enjoy.
Listen, I've been a fan of capital markets and economics since I was young. I was reading Marx and Adam Smith. We are now in a time and space which will be written about.
Oh, for sure.
100, 200 years from today.
So today I'm very pleased to welcome Yoni Assia, well known as the CEO of eToro, but more importantly, the founder of GoodDollar, a nonprofit open source community aimed at really creating a sustainable and viable version of UBI, the famous universal basic income using DeFi. Yoni, welcome. It's great to have you on here. Such a legend of the space and someone I think that people probably don't realize how much you've been in crypto since the very, very, very early days. And I want to start there with the Colored Coins paper. You and Vitalik writing about something that seems kind of almost quaint now, but you were in it with Vitalik right at the beginning.
Well, we were very early on to Bitcoin. I think my pinned tweet is telling Brett King that I see Bitcoin rising from 12 cents to $2, and banks should take a better look at what's happening. And then sort of early days in Bitcoin talk, when we looked at crypto, that's what got me excited around Bitcoin is, wow, that's how finance should work. So I'm a fintech entrepreneur. I started eToro. We're connected to all of the banks. And I realized how broken the system is. And you need a 24/7 reliable system that works for everyone. And when I saw Bitcoin for the first time, I'm like, wow, that's how all financial services should work based on the blockchain. And then we started thinking about how can we tokenize real world assets like dollar and euro and gold and silver on top of the Bitcoin network. And we found a lot of people within Bitcoin Talk, which sort of was the square then before crypto Twitter, that were passionate about how do we create more tokenized assets on top of the Bitcoin protocol. And that's how we started Colored Coins. A lot of people came in and figured, okay, we can actually use the same technology to tokenize any type of asset, fungible or non-fungible, on top of the Bitcoin network. And that was the initiation of Colored Coins. And I actually wrote something in Bitcoin Talk and had Vitalik reply to me that he'd be happy to participate as a coder. And he wrote the first web version that communicated with the Colored Coins protocol. And he came to Israel and actually sat at eToro offices to write the Colored Coins white paper together with us. And that was like a lot of the OGs of that time were involved in that protocol, in Colored Coins protocol, and how can we add more tokenization? And then at some point, there was a lot of debate and discussion, that's an understatement for people arguing and shouting at each other, about whether Bitcoin's purpose is for tokenized assets, whether tokenized assets should be monetized. And at some point, Vitalik and some other people from the Colored Coins project sort of went off and forked into Ethereum.
Yeah, I mean, I'm curious how much you personally had to resist the urge to go and just put eToro to one side and jump full bore into crypto. There must have been a moment where you were like, well, I could do that. It would have been exciting, right?
So it would have been exciting, but at that point, we had a lot of resistance on crypto. So at eToro, as a fintech company dealing also with sort of traditional assets like stocks and commodities, we had a lot of resistance back then into crypto. On the company's shareholder level, they were like, this is defocusing. What is this crypto? What are you talking about? That's something completely different. And I had a lot of, I had to do a lot of pushing in order to actually add Bitcoin into eToro in 2013. A lot of sort of, elbows to make sure that regulators understand what we're doing. How do we add Bitcoin into a regulated financial institution? Yeah, the minute we did that, we launched Bitcoin on eToro just moments before Mt. Gox failed, and Bitcoin went from $1,200 to $200. And I'm like, oh my God, I just fought for something for a while, and now everybody thinks that I was wrong and they were right. It took a while till 2017 since people realized really the power of the concept of Bitcoin and the blockchain in general.
So we're talking about quite a long time ago now. It's like getting on for 10 years. But what I thought was really interesting was the blog you wrote back in 2008, which was the origin of the GoodDollar story called The Visible Hand. And I wonder if you could talk me through some of the ideas there, because you were talking about, firstly, transparency in the connection between entities and money, and then giffen goods, which I thought was really interesting as well. So there's two kind of concepts there. And I wonder if you could firstly tell us what those were, and then whether they've managed to last through into the iteration of GoodDollar as we see it now.
So back in 2008, I was, front row seat into the global financial crisis. And the interesting thing I saw there, and this was early days, this is like I was 2 years into eToro, and we saw the global financial crisis. And what we saw is everything froze. Like the system just didn't work anymore. You could, all of the APIs of all of the banks, everything was frozen. You went to sleep trying to figure out if when you wake up in the morning, the money you had in the bank is still there. And at that point, I realized how broken the current financial services system is. It's disintegrated, right? It's based on different financial institutions communicating with each other, and really based on the fact that they're open and not necessarily open 24/7. And at the same time, I sort of took passion to the fact that something wrong is happening because of, if you look at the global financial crisis, the sort of distribution of wealth got completely skewed. And everybody's talking always about this statement of the rich get richer and the poor get poorer. And I realized that the reason for that is really how the system works. And unfortunately now, when we see increasing interest rates, right, that's really what you see. Because if you're now very wealthy and suddenly interest rates are going up, then you make a lot of money just on interest rate. You don't need to do anything. You just make money on interest rate without needing to sort of contribute to society at all, just by having your money sit in a bank, where in my view, it should be the opposite. People who actually have more money should get less interest rate, especially on an absolute number, and people who have less should actually get more, because those are the people who need it the most. And then when I started looking into that concept of basically getting differential interest rates, so the less you have, you actually get more, then the biggest problem was, how do you find out who has less and who has more in a system where nobody really knows who has what? And that's what I talked about, transparent money, that if you have, and this was 2008, prior to blockchain and Bitcoin, if you really have a ledger and you know how much people actually have in their accounts, you're able to create that differentiator where people who have less will get more and people who have more will get less. And in my view, that is a more fair economic framework than the one that exists today, that leads to the constant increase in inequality in the world, and that actually leads to the poor get poorer and the rich get richer.
So the obvious issue here is, well, firstly, privacy. If you know what people have, then it's possible to discriminate against them. And secondly, if you are indeed wealthy, you can game the system. You can obfuscate money and you can split it into multiple wallets. And so did you ever go as far as thinking about ways to safeguard against the, gamification of the system?
So gamification, definitely. If you think about the GoodDollar, I'll pause for a second. I'll explain what the GoodDollar is. So at the GoodDollar protocol, I started writing it in 2008. Then came Bitcoin, sort of inspired. I got early into Bitcoin because of my fascination around the GoodDollar. And then came Ethereum and smart contracts that led to the birth eventually of us developing the GoodDollar. So the GoodDollar is goodDollar.org. Every person in the world can open a wallet and every day claim GoodDollars. So everybody in the world can actually start educating themselves about digital currencies. They get an ERC20 token for free, and they can experiment with it, which improves financial education and financial inclusion. And the thought process there was we're doing a hash of face identification. So that way, you can't really game the system, right? So we take a face identification and we hash it so your privacy is maintained, but we know that every person in the world can have only one GoodDollar account to claim GoodDollars. So we definitely did think about that. We had also models of how do we decentralize that, because face recognition obviously is centralized into basically, one company, the company that runs the GoodDollar, the nonprofit, to be able to do that. We thought of various ways to also decentralize it, but we thought that was a second priority, to decentralize face recognition, which basically prevents that multiple accounts claiming GoodDollars. And that also answers the other thing. So as long as every person opens one GoodDollar account and claims for one GoodDollar account based on face recognition, and the fact also that GoodDollars to start with is giving only basically few money every time, right? So it gives you 30 GoodDollars a day, which means there's no really point in trying to gamify the system from the outset. Those two together basically build something that's relatively resilient to gaming.
So did you ever come across WorldCoin? Did that come across your radar at any point?
It did. I did not follow up on it recently, but I think what was sensitive there, and that's why we built the GoodDollar as a DAO and sort of recreated something that's decentralized, that the team now runs and have voting power over basically governance, is we realize this can't be a for-profit organization. This can't be something that's for-profit, because we understand it has to be truly decentralized and resilient in order for it to operate in the place where it's needed most, which is places like Africa, Asia, Latin America, and places where people need access to financial services, don't necessarily have access to financial services.
Avalanche Multiverse is a $290 million program spurring the growth of subnets. Avalanche is novel technology for infinite scalability. Subnets empower an unlimited number of projects to build entirely customized blockchains. So, who's subnets? Everyone from GameFi projects like DeFi Kingdoms and Krabada to global enterprises like Deloitte and Lemonade are using subnets to empower Web3 applications without limits. Ready to see for yourself? Try a Multiverse project today. Good morning and good subnetting. Find more info at avax.network. So let's get into GoodDollar itself and the mechanics of it. So on the site, you say it uses free market forces and the principles of social investing to create a stream of free digital currency. And I think eToro of all platforms, and you particularly, I think you understand what social investing actually is. And then it says anyone can receive real free reserve-backed crypto straight to your phone, so you don't need to invest in order to participate and learn. This sounds too good to be true. How does it work?
So first, let's understand, and that's why across time we said because eventually I believe that the structure can solve financial inequality, right? I believe in universal basic income as a concept, and that everybody around the world should be able to participate in the digital economy. But trying to solve for inequality is a very big problem. So we tried to say, okay, let's look at a three-step process. First, financial education. I think every person in the world, billions of people, should have the ability to have a blockchain-based digital asset in a non-custodial wallet for free. So everybody should be able to experiment with digital assets. And that's sort of the first pillar of what we've built. We said every person in the world can go into GoodDollar.org and start claiming GoodDollar and send and receive to everybody around the world. And that doesn't have any cost basis. So that's for sure not too good to be true. Everybody can do that. Second layer is financial inclusion. If you assume this is the decentralized autonomous organization that's running these smart contracts, then anybody around the world can now claim these GoodDollars. And again, this is all blockchain based. It's a protocol. And again, not too good to be true and already happening. And the third is value. And I call this hacking value. And if you think about currency in general, currency is a concept. It's our belief, right? So when people in Israel trade, use the shekels, or in the US dollars, or in Europe euro, they believe in the value of the currency, and that's really what's running the economy. Everybody's belief in the currency. What is Bitcoin? Bitcoin's belief. Bitcoin is a belief that it is important to have a deflationary asset and that is a store of value. Bitcoin potentially can replace gold and a digital world even be bigger than gold, right? It's a supply and demand. Supply and demand is based on belief. So I'll just give you an example. So GoodDollars today are obviously very far from one GoodDollar equals $1. But if somebody believes in the ecosystem, let's say suddenly Google says, or Apple say, anything you want to buy from Apple, you can buy in one GoodDollar equals $1, in these countries, then they automatically now peg the value of GoodDollar to the dollar, right? And that's a decision of one company to do. Now, this entire infrastructure is based on a reserve system. So when people actually buy GoodDollars, so we at eToro bought GoodDollars, we also donated, we're also staking into the GoodDollar protocol. So when we're staking into the GoodDollar protocol, we're staking $1 million. Those $1 million generate yield through things like Compound and Aave. That yield gets into the reserve, and it increases the value of the GoodDollar. And we at eToro, we don't risk money. We just waive our right to interest rate, which, if you remember what I said before, is the problem is that people expect that the richer you are, you have more access to interest rates, sometimes even better interest rates. If you're willing to waive those interest rates, that yield, and give it to the GoodDollar, you're not risking your funds. You're just waiving your interest rate, and that interest rate goes into the reserve, increasing the value of GoodDollar to anybody who holds GoodDollar. People can actually buy GoodDollar from the reserve in Ethereum or in DAI, and then they add money into the reserve, they get GoodDollars, but then the reserve increases as well, and therefore, again, GoodDollar prices increase. So there's two parts for how do we create value to the GoodDollar. One is by usage. The more people use GoodDollar to sell goods and services, to buy goods and services, that automatically creates value. So I'm sure a lot of people understand token economics today, definitely more than 5 years ago. The more volume and velocity you have in an ecosystem, it actually generates value to the token itself. So the more people who buy and sell in GoodDollars actually generate good. It increases the value of the GoodDollar. Therefore, it increases the value for everybody who's collecting and claiming GoodDollars every day. And on the other hand, there's the reserve, and the reserve is a fractional reserve. The more money you have in the reserve, it actually increases the price of GoodDollar a bit more. So we've built something that potentially can scale. I used to give this an example. Hopefully, Elon Musk bought now Twitter for $40 billion. But when we looked at the scale of this concept, if somebody like Elon Musk or Mark Zuckerberg decided to put in $5 billion into the GoodDollar, that would automatically scale the entire GoodDollar economy and value to actually provide for hundreds of millions of dollars of universal basic income every year to people who claim it. So it has that leverage effect, because the more money there is in the reserve, the more value basically the GoodDollar has to everybody's collecting it. So in our view, this is hacking something that exists today called fractional reserve banking, right? That's how the entire economy works on fractional reserve. But it's hacking it into the point of saying, if it's a parallel economy and people want to actually stake or donate money into that smart contract, it can increase the value of GoodDollars for everybody who owns GoodDollar, uses GoodDollar for buying and selling services.
So just for people listening at home, it's really a two-sided thing. You have claimers and you have stakers. Claimers are ordinary citizens that want to claim the GoodDollars every day, and stakers are those who are waiving the right to the yield that they would otherwise receive on the deposit of some form and redirecting it into the reserve. This seems like a kind of form of digital altruism, but what is it beyond altruism that someone who's staking could receive from this? Are you literally relying on people's goodwill to make this happen?
So first, they're also getting GoodDollars. So potentially, if the GoodDollar value over time increases, then they can actually make money from it. But they're waiving the dollar value yield into GoodDollars, right? So again, if you believe in the long-term proposition that a fair economy should be the larger economy, then you're not really waiving yield. You're just deferring yield or converting yield into a different currency. And in addition to that, I have to say that I know a lot of crypto OGs. I know a lot of very wealthy individuals. And that's something very interesting in what's happening over the last 10 years. A lot of people generated wealth through technology, whether it's through internet technology, e-commerce, or whether it's through crypto. And when you look at people, Gen Y who generated wealth, they're actually very interested in figuring out how to fix the system. A lot of us feel that the system isn't fair for too many people out there, and that we want more people to participate more fairly in the economy, but we don't necessarily have the tools to do it in a way that we feel is objective, right? I'm a fan of Ayn Rand and objectivism. I'm looking to stake or invest in something that's objective, that creates just a better system for everyone. So I do believe we have a lot of wealthy individuals in the world that are actually willing to waive their existing yield to build a better system.
Well, they have to do it first. So someone has to step up and say, I'm going to do it.
We did, right?
Yeah.
We're staking $1 billion. Maybe we'll stake more very soon. But again, there's no doubt that in order for something like this to happen at scale, where it impacts hundreds of millions of people, you do need significant sort of inflection point of people joining in, looking at the code and saying, hey, this works. It's like Bitcoin, it can work at scale. It could be worth $1 trillion or $2 trillion, but we need to participate in order for it to scale.
Well, you said something earlier, which is you need velocity and volume for economic systems to function. And Bitcoin, its greatest meme is HODL, which is basically a form of constipation. It's designed to slow down economic activity in order to promote, I guess, long-term holding value, which is always the bit that sticks to me. It's like you promote HODL, but actually you need the money to be sloshing around, which is why stablecoins are so fascinating. We were looking at a stablecoin today, which has been launched on the Tron network. It's called USDD. Thanks, Justin. And putting all the snark to one side, he's saying that he can put together a 30% fixed rate of interest on stablecoins paid out in stablecoins. Are you interested in looking at things like that, or maybe Anchor Protocol on UST to generate a faster, rate of interest? Or, I'm looking at, you've got USDC and DAI on Compound here. They're not the best rates of interest out there. And things like Anchor could provide a better rate of interest and get you get more into the system faster?
So first of all, the team itself and sort of the good DAO, right, the Decentralized Autonomous Organization, can define which protocol do they add as the next protocol to generate yield. But I will say something, and again, my grandfather came from banking, and maybe because of that, I'm a bit conservative. He used to tell me, whenever yield is double digit and somebody's promising you something that's double digit, just make sure you really understand the risks. So yield and risk, or risk and return, is very much the two sides of the same coin. And when there is double-digit returns, significant APYs, at anything you look at, you need to ask yourself, what's the other side of the coin? What's the risk here? And when we looked at what we wanted to do in order to build the reserve, we said we wanted people who actually invest in the reserve to not have the risk of the reserve disappearing. And because of that, we were conservative as to what yield generation protocols the GoodDollar reserve goes into. Yeah,
that makes sense. I mean, I'm also skeptical about this. If you're looking at long-term sustainability, then like double digits, like Terra is able to do it, but they massively back it with their own reserve. And that feels like a system that's like a prolonged introductory rate. So tell me about the Good DAO. This is basically your decentralized organization for governing, I guess, a fairly limited number of decisions because you want to keep it simple, right?
Yeah, it's quite simple. It could evolve over time. But generally right now, the Good DAO is just a governance protocol to define what are the next sort of both the project roadmap or significant decisions in the project, as well as where does the reserve sit and how the staking protocol works.
So I have the big question that's sitting in the back of my mind is like, how do you onboard people into this system? Because your target market really is people who probably have no exposure to crypto and they might have a phone, but it's a hard sell, I think, to get them in, just to make that first initial step. Friction is really hard to get past.
So, we have over 400,000 people who already opened wallets. We have about 70,000 people who are claiming. I think for us now, it's about creating the ecosystem so people can see the real value. So we had amazing stories. We're trying to tell those stories over Twitter, over social media. We had people who claimed GoodDollars for a while to actually pay for tuition in Nigeria, for university in Nigeria. We had stories actually in Israel. We're working with a food kitchen, so we can actually pay for fruits and vegetables with GoodDollars. So we and the community are basically promoting a lot of these stories of how people can actually use GoodDollars to receive sort of philanthropic goods and services, or things that are that you would generally say everybody says is very good things to consume. But again, I think the process is about hacking value. How do we make sure more people buy and sell goods and services in GoodDollar? And then on the other hand, how do we promote GoodDollar into more people who have wealth, who are willing to stake into the GoodDollar to increase the value of the GoodDollar for everyone?
Spirax recently launched USDS, a decentralized stablecoin with built-in auto yield. The stablecoin generates yield organically from DeFi applications like Curve, then drops it right into your wallet. Residing 100% on-chain, USDS is an ideal collateral for DeFi users and doubles as a high-interest savings account for the metaverse. Thanks to the auto yield, it pays to hold USDS. Visit spirax.io to start earning today. Now, I know you have tons to say about the metaverse, but we're talking about basically a good that drops into people's wallets. You own an ape. Presumably you got ape coin, and there's been multiple airdrops. Like, it feels a bit strange. I also have an ape, and I received like ape coin. Are you conflicted at all by that? It feels a little strange, that whole Bored Ape kind of ownership and ecosystem. And
I love the concept of sort of magic internet money, right? So what we're seeing is, people generate wealth out of thin air. I don't think that's a bad thing. I think, people that are more conservative are looking at what's happening and they're like, this doesn't make any sense. You bought a JPEG for $400. It's worth $400,000. Now you got another $100,000 in this token. Now they give you access to more NFTs. I think what's happening, and I would generally sort of look at the entire crypto industry, $2 trillion worth of wealth was generated out of thin air, the majority of it out of thin air. And it generated, it redistributed wealth, right? It created wealth to a lot of individuals. You could argue about that distribution of wealth, the inequality in crypto, but in general, you have a generation that suddenly took the tools of the internet, the tools of creating new token economics, and generated wealth in ways that still the traditional world really can't understand, maybe doesn't want to understand. Anything you'll hear from a pension fund manager anywhere is crypto is dangerous. NFTs are going into zero. If you're buying into ICOs, you're wasting your money. And let's warn people that they're risking 100% of their money that's going to disappear. And then at the end of the day, I'm looking around my sort of crypto community, and a lot of people generated wealth. So in some cases, significant amount of wealth. So I think what this proves is this technology, right? And this community, right? So the global, again, technology, let's quote unquote, call it blockchain. And community, let's call it the crypto community worldwide, which will scale, are able to generate value out of thin air. And we've seen $2 trillion of this value already generated. So when I'm looking at the GoodDollar, what I'm saying is if we can structure this as something that's fairer and better for everyone, why can't we create another $1 or $2 trillion of value that are just being distributed more fairly, right? But it's all about, and everything in technology is about iterating. It's about sort of, iterating one idea into another. NFTs are undoubtedly something that is generating a lot of interest and wealth right now in the world, and about distributing wealth from one country to another, from artists to speculators. So I think, again, what this really proves is there is this thing called magic internet money. It's happening right now, and people are already generating it. It's just about what's the right thing, how do you distribute it, how do you make it from 100 million people to 1 billion people to maybe 5 billion people using it.
Yeah, you wrote a blog in 2018, what if the UK distributed a digital wallet to each of its citizens? I thought that was really interesting. We had an idea when I was working at Harmony, which would, like, what if we could persuade people to not use Facebook for 2 days and then pay them the value of the data that they didn't give to Facebook? And then we just distribute coins to them. And then suddenly they've got these things like, what do we do with it? And maybe we could talk to Brave and see if we could get like some goods and services built on top of it. Like, you realize that there's no way you're ever going to be able to make that happen. But sometimes like ideas just need someone to give it a little kick, and then off you go. Maybe Elon's going to integrate Doge into Twitter. Who knows?
I'm certain he's going to integrate Doge into Twitcoin. I'm calling it Twitcoin from now on.
It's going to happen, isn't it?
We actually started a project called Twitcoin in 2012.
Wow.
At the same time of colored coins. We actually, one of the coins we issued on colored coins was Twitcoin. And we said, let's create a Twitcoin that people on Twitter can send to one another through tweets. And I think there's a good chance we're going to see, because Elon is excited about crypto and now is the owner of Twitter. And in my view, Twitter as a decentralized platform is just mind-boggling, right? So if you think about, if Twitter now distributed to every single, I think it's 300 million users, some Twitcoins, and enable that commerce in Twitter, maybe they distributed Dogecoin. Maybe Elon just bought enough Dogecoin to distribute to 300 million people some Dogecoin. I think that potentially could build something that could scale very, very, very fast. So the combination of social networks and crypto is something that is obvious but hasn't happened yet. I think it's an interesting sort of thesis to see if Elon goes into that direction. But in general, also when we've seen Libra, I was betting that Mark is going to take Libra all the way. And Libra, although it wasn't sort of specifically written, but I think everybody realized that's what's going to happen. It was supposed to be like the biggest airdrop in human history, like just airdropping to 2 billion people, $10 in a Libra account, boom. You have 2 billion people, suddenly you have a digital wallet and a currency that potentially has or has not reserves, right? So it's all about, I think the future is inevitable. I think we're going into that direction where most people around the world are going to have a digital wallet with digital assets, browsing on the internet. Web3 means you're browsing and...
There we go. So we just got cut off because our producer failed to pay for the Zoom account in time. So Web 2, this wouldn't happen in Web 3. Yoni was in the middle of explaining the failed Libra airdrop attempt. I think everyone's pretty familiar with that story, and everyone loves to hate on Zuck. I know that you personally, as I did my homework, you're actually kind of a fan of apps that you use, and you invest in things that you use, WhatsApp, Instagram, for instance. So you're not the biggest Mark Zuckerberg hater.
No. And by the way, my portfolio is public. So anybody who wants can go to eToro.com/Yoni Assia and see my entire portfolio. I think that when I use a product of a company, I believe in that company. If I wouldn't believe in that company, I'd stop using their product. So I'm a buyer of Apple and Google and Netflix and Microsoft and Facebook and Salesforce here in the company and many others. I think in general, a lot of businesses and a lot of entrepreneurs are trying to do good, but in some cases that just gets lost in translation. And I don't take that lost in translation necessarily against them.
I think there's also a degree to which you reach a certain size, you become a target for all sorts of things that are invisible to most people in terms of regulation. And it's something you must have encountered an immense amount of, particularly in the sector that you're in, and like people going, oh, I don't know, there's all these teenagers coming in and buying stocks, and I don't know. I mean, how do you combat that? How do you deal with that when you're trying to do something genuinely good?
It's very hard, and it requires a lot of work and a lot of patience. If you look at sort of the story of Bill Gates, he tried to bring the internet to everyone. He said, let's put Internet Explorer on every computer. And then he got sued by European governments. And he said, it doesn't make sense. I want to just do good. I want more people to connect to the internet. And he failed. He lost. And that's where he said, I'll stop doing, I'll just go into nonprofit. Right. So I think in a lot of cases, especially at very large scale, when you try to do good, because, good and bad are subjective, then you have resistance by potentially governments, by the education system, by politicians to try and do what's good in your view for people. In my view, I've always been a proponent that retail investors should have the ability to make their own decisions. As if they understand the risk of what they're doing, they should be able to buy crypto or NFTs or participate in ICOs. But when you think of, the regulatory framework around the world, it's a paternal system that says we know better what the consumer needs and can do, and we need to protect him. And I think that's where we came from. A lot of sort of traditional financial institutions still assume they know better to do for the consumer with his money than what he possibly could think about doing with his own money, right? I just come from a different generation and a different concept of freedom. I think people should really understand what to do with their money. They should be educated about what to do with their money, but they should make their own decisions. So I'm very pro free markets and education versus sort of, the government deciding what you can or cannot do. But there is a balance between those two, which is a delicate balance between how do you prevent people from jumping off a cliff to how do you make sure people have wings and can fly to the moon.
So that really brings us full circle to one of the big criticisms of UBI, which is that if you make it too easy for people to get money, then they will simply become lazy and entitled and won't work for it anymore. And there's always been that argument that like you just give people a handout, they'll exploit it somehow.
So I think we did very interesting simulations in the GoodDollar, which is, first of all, right now collecting 30, 40 GoodDollars a day is several cents a day. So I don't think you're becoming lazy when you collect several cents a day. But also on an equilibrium point of view, if you are collecting a few cents every day and you continue to collect every cent every day, you probably need those few cents every day. So go and collect it, right? So if you think at scale at GoodDollar increasing from X cent to 10X cent to 100X cent, it's a self-fulfilling prophecy of people really need this, right? So if people suddenly claim $0.50 a day, $2 a day, right? Which at scale, I truly believe can happen, right? So at $2 a day, there's a billion people today who live under $2 a day, right? But the people who will actually collect the $2 a day are people who live on under $2 a day. So let them live and participate in the economy. So I'm really not concerned. Like if you tell me, what if this creates $5,000 a month but that's not the case. So when you build something bottom up, you're not trying to reach sort of a very developed country, high sort of level of how people live their lives and say, here's $5,000 a month or even $1,000 a month. You're trying to first reach really the people who are left out of the system, who are not a part of the system at all. And you say, here's 20 cents a day or $1 a day. I don't think that argument against UBI has any merit at all.
Is your crypto sitting idle without earning you any passive income? On Nexo, you can maximize the value of your crypto in no time and earn rates of up to 17%. Their web platform and mobile app are super easy to use. You can buy crypto with cards instantly and start earning interest paid out daily. The Nexo exchange has over 300 market pairs. Every time you swap or buy crypto, you get up to 0.5% cash back that's automatically added to your wallet. If you want to finance buying a car or a trip to a faraway place, you can borrow cash by using your crypto or NFT as collateral. You don't lose your crypto, and you can get borrowing rates as low as 0% APR. Nexo has over 4 million users worldwide, and their platform is equipped with a top-quality security infrastructure designed to ensure maximum protection of assets at all times. Go to nexo.io and get started today. And there's also a degree to which people could claim the GoodDollars and then redirect them or put them into a pool or set up some kind of system for collecting for good cause. And as you rightly say, there are places around the world where people live on an absurdly low wage and income, and it can actually make a difference. And I think sometimes Western brains, we don't get that. And there's a little bit of white savior going on as well in all of this, which is hard to kind of wrap your head around. But fundamentally, the idea makes sense. I wonder if you have any final thoughts on this. Maybe it's about Elon, maybe it's about the metaverse, but I'm really curious now I have you. Like, I think that what's so fascinating about you is that you built essentially the social trading thing that now is reality for crypto. That's exactly what we all do. We trade with memes and meme stonks. And so much of that came through you guys. Do you feel a responsibility for GM, for instance? I know you're claiming responsibility for NFTs on your Twitter profile.
I don't. I think what we've been able to do continuously is see trends that are 3, 5, sometimes 10 years ahead of us, and sort of bring our customers into it. But it's always bigger than us, right? So the rise of retail investors in stocks is much bigger than just eToro, but we anticipate this to continue because I believe there's hundreds of millions of people around the world who should invest in capital markets. The rise in crypto, we were very early on into both Bitcoin and Ethereum and others. And we saw it, and we tried, we told people, listen, this is interesting, understand the risks of what you're doing, but this is super interesting and is something that's going to be here. But we're far from being the entire crypto industry or the entire retail crypto industry. The same now with sort of NFTs in the metaverse. I think it's super interesting what's happening, with apes and punks and doodles. And I think it enables artists from all around the world to distribute art in a new way, to take something that potentially was, again, it's all about the democratization of finance. So now, we've democratized gold with Bitcoin. We've democratized sort of digital oil with Ethereum and other blockchains. We've democratized the concept of going public through ICOs or IDOs. And now we're democratizing the digital art and collectibles ecosystem. And I think that's going to be very, very big. But it's also, it's something very different than traditional investing. So people should understand the risks of, buying when you buy sneakers, you don't expect to sell them at a higher price. You expect to either collect them or wear them. So I think each of these sort of industries or sort of changes in the ecosystem, we've been able to look at them and sort of adapt to them and adapt eToro into them early on. But I think the bigger story is just we've been able to stand on the shoulders of giants and see what's coming into the industry.
Well, the giants of this world don't get much bigger than Elon. And I know you're as excited as I am to see what on earth he's going to do next. But for sure, it's going to be exciting. I'm just going to go back to this last blog post, the what if the UK distributed a digital wallet? Because I am English and I remember Bear Stearns and all of these things. And you said rather than distributing 375 billion GBP to the banks and allowing this money to trickle down, what if you just gave it to the people and said, you go and decide and you spend it and then it enters the economy that way? I think that's so rewiring your brain to think that way. So on an individual level, rather than too big to fail, it's pretty profound.
Again, that's the process of democratization. If you think of what we've seen in the COVID-19 pandemic, was a bit of democratization of quantitative easing, right? So when you think of quantitative easing, it is about how do you ease in the economy? So we give more money to the banks, you lower the interest rates, you enable them to have less reserves so they can lend more money, right, into the economy. But when you think of CDBCs, right, and in theory, I think the pound potentially could be like, easily a country can say every person who has an ID, here's their digital wallet, and we're distributing money directly to the individuals. It should be actually a much more effective way to accelerate the economy because it doesn't get stuck. But what's happening, and again, I think in democracies and Western countries, I think generally it's just the inefficiency of the system, right? So financial institutions get richer and bigger, basically because they don't really distribute everything that they're supposed to distribute to the end consumers. But when you think of developing countries, due to the lack of efficiency, governance, control, balances in the ecosystem, it all goes to corruption. Everything disappears. Whatever the country tries to do just absolutely disappears. But if a country has a direct relationship with their consumers, their citizens, and they're able to provide directly, I think that is a huge opportunity, both of democracy, but also of potentially how we should look at the future. I think one of the blog posts I wrote a while back was, I'm waking up, or my kid is waking up somewhere in 2035, and suddenly he gets a push notification from Chinese government asking him, did you complete your Chinese tutoring of Mandarin number 12? And if yes, here's some digital yuans for you, right? So if you think of, we used to think of geography based on space, and that's the metaverse now. Governments, if they can actually redistribute money across their borders by having people from all around the world getting sort of digital passports, participating in that economy, which is what I think of your ape, right? You're a part of ape country now, and I don't know. I hope you did something is coming .xyz and are participating in the drop on Saturday. If not, go and yell at their Twitter. But these communities, which can start from like ApeCoin or Doodles or World of Women, and on the other hand, existing communities, whether it's existing governments or existing large-scale communities, can now collaborate and communicate around value, around currency, which is something that really was defined as sort of national borders in the past, and now is moving into sort of a borderless metaverse for everyone.
And I think that's exactly right. You tend to define yourself by the borders that you grew up in. And I think in Israel, you feel that very keenly, that your borders are very kind of at risk and dangerous. But in a digital context, you can be whatever you want in the morning, in the afternoon, wherever. And suddenly that is a form of freedom that I think most people have not really been accustomed to before. And it's really fascinating to think of a Bored Ape as the tribal flag, in a sense. And you do cluster around them in these tribes in a way.
I exactly said that. So think about the concept that you're going to have ape embassies around the world. You're going to have 100 ape embassies, and you want to travel outside of the UK, you go into Ibiza and just land in an ape embassy and you stay there for like a month. So, it's interesting to think about that, because it is exactly that tribal flag. It's the question of how these tribes now regather over the internet, regather over the metaverse, and that's the other part of it, and what's going to be the tension between existing governments and national borders and those tribes.
Well, absolutely, because they want to keep the value in the country, but then what is the country? And that really is the question. Well, Yoni, it's been absolutely fascinating talking to you. We've ended on ideas of social money, and I think that's a very apt place to stop because of eToro. Thank you so much for joining us. And I'm really looking forward to where this goes. Really fascinating and interesting protocol and experiment. Thank you.
Thank you very much.